Hello student. Today I am presenting this video for BCom and BBA semester 2. Topic: Business cycle. Subject: Macroeconomics. Presentation flow. Today we learn what is a business cycle, stages of the business cycle, features of business cycle, successful keys of business cycle, disadvantages of business cycle. What is a business cycle? Business cycle are function in economic activity. It describes the rise and fall in production, output of goods and service in an economy. Business cycles are generally measured using the rise and fall in the real gross domestic product or the GDP adjusted for inflation. Business cycle should not be confused with market cycle, which are measured using broad stock market index. The business cycle is also different from the debt cycle, which refer to the rise and fall in household and government debt. Business cycle are function in economic activity. This function included output from all sectors, including household, non-profit, government, as well as business output. Business cycle is better description of what is a measured. Business cycle are different from debt cycle. Business cycle are rise and fall in the real gross domestic product or the GDP. Business cycle is also known as the economic cycle or trade cycle. Business cycle are the rise and fall in production, output of goods and service in an economy. Business cycle are measured by the National Bureau of Economic Research in the United States. Stages of the business cycle. There are the 6 stages of business cycle. First, expansion. Second, peak. Third, recession. 4, depreciation. 5, growth. 6, recovery. Deeply we discuss in next slide. First, expansion. This is the stage when the expansion occurs. There is an increase in employment, income, production, and sales. People generally pay their debts on time. The first stage in the business cycle is expansion. In this stage, there is an increase in positive economic indicator such as employment, income, production, output, wages, profit, demand, and supply of goods and service. Debtors are generally paying their debt on time. The velocity of the money supply is high and investment is also high. This process continues as long as economic conditions are favorable for expansion. Second, peak. The second stage is a peak when the economy hits a snag, having reached the maximum level of growth. Price hit their highest level and economic indicator stop growing. Many people start to restructure as the company's growth start to reverse. In the second stage, the economy then reached a saturation point or peak, which is the second stage of the business cycle. The maximum limit of growth is attained. Consumers are restructure their budget at this point. Third, recession. There are periods of contraction during a recession. Unemployment rise, production slow down, sales start to drop because of decline in demand. In the third stage, the recession is the stage, the flow the peak faces. The demand for goods and service start decline rapidly and steadily, which create a situation of excess supply in the market. Fourth, depreciation. Economic growth continues to drop while unemployment rises and production plummets. Consumer and business find it hard to secure a credit. Trade is reduced, and bankruptcies start to increase the consumer confidence, and investment level also drop. In the fourth stage, there is a rise in unemployment. The growth in the economy continue to decline, and as this fall below the growth line. 5. Growth. This period marked the end of the depreciation, leading an economy that is a further decline until the price of factors, as well as the demand and supply of goods and service, reach their lowest point. In the depreciation stages, the economic growth rate become a negative. There is a further decline until the price of factor as well as the demand and supply of goods and services reach their lowest point. The economy eventually reaches the throat. It is the negative saturation point for an economy. 6. Recovery. In this stage, the economy starts to turn around. Low price spur and increase in demand. Employment and production start to rise, and lenders start to open up their credit coffers. This stage marks the end of business cycle. After the next stage, the economy comes to stage of recovery. In this phase, there is a turnaround from the growth, and the economy start recovering from the negative growth rate. Demand start to pick up due to the lowest price, and constantly supply start reacting to. Recovery continue until the economy return to steady growth level. It complete a one full business cycle of boom. Features of business cycle. There are the features of business cycle. First, occur periodically. As we saw, these phases occur from time to time. However, they do not occur in for specific time. The time period will vary according to the industries and the economic condition. The duration may vary from anywhere between 2 to 10 or even 12 years. As we saw that these phases occur from time to time, change industries and economic condition between 2 or even 12 years. Second, they are synchronic. Another of the features of business cycle is that they are synchronic. Business cycles are not limited to one firm or one industry. They originate in the free economy and are pervasive in nature. The business cycles are not limited to one firm or one industry. In one industry quickly spread to all other industries and finally affected the economy as well. For example, a recession in the steel furniture will set off a chain reaction until there is a recession in the entire economy. Third, all sectors are affected. All major sectors of the economy will face the adverse effect of a business cycle. Some industries like the capital goods industries, consumer goods industries may be affected. All factors are affected sector. Goods face the maximum brunt of the cycling function. Non-durable goods do not face such a problem generally. Fourth, complex phenomenon. Business cycles are a very complex and dynamic phenomenon. They do not have any uniformity. There are no set cues for business cycle as well, so it is nearly impossible to predict or prepare for this business cycle. in the complex phenomenon were difficult to prepare because they have do not uniformity. 5. Affected all department. Trade cycles are not only limited to the output of goods and services. It, it has an effect on all other variables as well, such as employment, the rate of interest, price level, investment, activity, etc. The trade cycle are affected on employment, interest rate, price level, investment, activity, etc. 6. In character. Trade cycles are contagious. They do not limit themselves to one country or one economy. Once they start in one country, they will spread to other country and economy via trade relation and international trade practice. The trade cycle are contagious. They have not limited themselves to one country or one economy so that they will spread to other country via trade relation and international practice. We have an actual example of this. When the great depreciation of 1929 in the USA later on had an adverse effect on the entire global economy. So, in an integrated global economy like today's, effect of a trade cycle spread far and wide. Successful keys of business cycle. There are the keys of successful business cycle. First, potential customer base. During of economic growth, income will rise. Therefore, customer will want to purchase a more product. This will be a good news for firm. Second, employment. Economic growth simulate higher employment. Since labor is a derived demand, not all industries will share in the growth of economy. Growth stimulate higher employment. Fiscal dividend from economy growth. Growth has a positive effect on government, finance, boosting tax revenue, and helping to reduce the budget. More people in work, rising spending, and higher company profit all contribute to all increase the flow, allowing them to spend more money for fiscal dividend and economy growth and investment. Rising demand and output encourage further investment by firm in new capital machinery. It increases growth and investment. Business confidence. Economic growth should have a positive impact on company profit and business confidence. Last, living standard. Growth improve a living standard and quality of life. Disadvantages of business cycle. There are the disadvantages of business cycle. First, inflation risk. Inflation risk commonly refers to the situation in which the price of goods and services increase more than expected. On inversely, such a situation result in the same amount of money, resulting in less purchasing power. Inflation risk is also known as purchasing power risk. Inflation risk depend on situation. If the economy grows too quickly, there is the danger inflation as a demand ahead to ability of the economy to supply goods and services. Producer take advantages of this by raising a price for consumer. It called a purchasing power risk. Second, externalities can be both positive or negative, can from either the production or consumption of goods or service. externalities. Fast growth can create a positive and negative externalities. It creates a production or consumption of goods and service. Third, inequality. Not all of the benefit of economic growth and evenly distributed. We can see a rise in national output, but also growing income and wealth inequality in society. Not all of the benefit of economy growth are evenly distributed. We can see a rise in national output but also growing income and wealth. Inequality in society, there will also be regional difference in the distribution of rising income and spending. Thank you.